stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
But at the end of the day, we've had a lot of really strong earnings. It's been a great earnings season. That's what's driving the market higher.
Lie, lie, lie. Lie, 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 lie.
And boy, do they lie. You know, today was interesting. We come out with our GDP, and they're all excited. They can't stand it. They said, well, look at this. We've grown 3.4%. And we expected it was just going to be 3.2, but we're at 3.4. Let's have a party. This is amazing. We're growing. What are you, nuts? Let's put this in perspective. So what they're not telling you is what's important. What GDP tells you. It identifies for you how bad your debt is, and can you pay that debt back? And remember, this whole rally that we've had since 2009, the 650% rally in the S&P since 2009, it's all been driven by debt, not earnings. Remember, Obama in 2009 said, no, we're not going to go with earnings. We're not going to go with economic growth. We're going to go with straight debt, QE, buy our own stocks, move those stocks up without profits. And that's what they did. So today, when they said it was 3.2 expected, came in 3.4, they're all happy, but the GDP identifies, can you pay your debt? Can you pay back that $34 trillion, especially to your largest creditors, Japan and China? Well, how do you figure that out? Well, you look at the debt, the ratio of the debt towards economic growth. So what is the ratio of our debt towards growth? Well, it should be at 60%. If you're at 60%, like all other countries, then you can manage the debt. You can pay it back. We're at 124%. What are you, nuts? 124%. You can't pay back your debt. And then they tell us how they're going to keep cutting rates. Remember, rate cuts are coming. They're coming. The stock market's going up. Rate cuts. Stock market's going up on rate cuts. No. Not going to happen. Why do you think our short-term Fed rate is still 5.3%? Been that way for 9 months. Because here's what they know. That our debt right now is enormous. And the ratio of our debt to our economic growth tells us we can't pay it back. So Japan and China keep raising rates on us. And when they keep raising rates on the money we borrow from them, our deficits get larger. So when they tell you how they're going to cut rates, how are you going to cut rates with a ratio that we have between our GDP and our debt, and they're raising rates? And anybody that's going to loan us money is raising rates. When you start selling those, look at the rates we have on our 10-year Treasury. Remember, in 2020, 2021, the debt on the Treasury was the 10-year Treasury, the interest on 10-year Treasury was, 0.1%? About 0.1%. So if you take the debt today on a 10-year Treasury, it's 4.2%. The debt on the rate, the short-term rate, which is the important rate, because that's the rate at which banks loan to each other, and before they used to loan to each other near 0.1% of 1%. That's why you could get a good deal in your car, and your house mortgage, and your snowmobile, and water skis, and everything else you finance. Now the banks loan to each other at 5.3%. And then they have to add on top of that what they're going to loan to you. You can't get a loan at 5.3%. So the point is, they've been masking this. Now, if you take this entire rally that we've been having, remember, we've had a 650% rally. Now, that's over the past 181 months or 15 years. And now, let's go back a little bit, or let's go forward and look at the rally we're in now in the past 5 months, up 25%. 25% here. Take a look at the chart right here. So in the last 5 months, October 2023 to March 2024, we're talking right here, okay? October 2003 to where we are today. That rally's up 25%. Now, they want us to believe it's up because we're going to have more rate cuts. Rate cuts are coming. And we're not going to have a recession, and we're going to have a soft landing. Now, that is really funny. That is hilarious because they're saying, oh, there's not going to be, we're going to have a soft landing for sure. But, oh, we're not going to have a recession. Forget about the recession. That's nuts. You're not going to have that. Really? So they're betting on a soft landing, which happens one time in the past 70 years, and they're poo-pooing that, oh, don't worry, we're not going to have a recession. When since 1978, we've had the inverted yield curve, or the yield curve invert 6 times, and we've had 6 recessions. So think about that for a moment. So they're saying, oh, there's no possibility of a recession. But when you look at the odds of the recession, since 1978, we've had 6 inverted yield curves and 6 recessions. And they're saying, oh, don't believe that one, but believe the other one. We're going to have a soft landing, which only happened one time in 78 years. These people are just nuts. So the debt increases that we've had are just insane. Now, from 2009 to 2024, remember, we've increased our debt 271%. Now, that doesn't even count the increased money supply of 214%, from 7 trillion to 22 trillion. In fact, if you take a look at the rally in 2020, right here, look at this, when the market, that's when the market pulled back in 2020. They said, oh, that's the reason it pulled back because of COVID. It had nothing to do with COVID. 2020. And they dropped interest rates from, like, I think that the long-term 10-year treasury, I think it was at 1.8, and they dropped it down to like 0.8%. They took the 5-year treasury that was like something like 3.1%, and they dropped it down to 0.1%, I believe. And look at the rally they got out of it. That's how they rallied the market. That's not earnings. They're trying to convince you earnings are really good. Earnings are terrific. Earnings are terrible. Earnings are terrible. And the proof is, just take a look at the numbers. When you look at the rallies we've been having, all these rallies, all the contribution are coming from a handful of stocks. So if you take any quarter, it's always the same stocks. In fact, if you take 2023, they said we had a 24% rally. But when you take out the Magnificent Seven, you don't have much of a rally at all. If it wasn't for Magnificent Seven, we'd be flat. And same thing with the last quarter of 2023. They're all saying, oh, we had a 10% return. Look at that. 10% return last quarter of 2023. But you pull out the Magnificent Seven stocks, we lost money. Or the gains dropped to a negative 1.7%. Oh, they don't want to tell you that. We'll be back with a lot more.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande of philsgang.com. You know, over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member. and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color-coded chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially the stock market, it gets really complicated, but it doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market, or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com. When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up, or why there's continued inflation, or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out, philsgang.com, philsgang.com.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up, or why there's continued inflation, or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. Join my gang, Phil's Gang, philsgang.com. 10 days free because we have the best education course in charting. We developed our own charts. We call it the Pro 2. It identifies a buy signal for you. It's a color code. When the algorithms spot money going into a stock better than average going in, it will set up a buy signal for us. And that's what you want to look at. Everything else is BS. All the crap you hear is BS. You just want to know how much money is going into that stock or that ETF. That's what's important. The money. Follow the money, not the BS. See, this is total BS right here.
It is absolutely the strong economy that's driving the earnings, and that's why they seem to be ignoring whether we're really going to have 3 or 4 cuts.
It's unbelievable. Really? Strong earnings, strong economy, really? Well, let me ask you, if it's a strong economy, then how come we have record household debt, we have record student loans, record credit card debt, record mortgage debt, personal bankruptcies have increased up 17%, business bankruptcies are up over 30%, that's almost historic, savings have dropped from 32% down to 4.2%, credit card delinquencies are going through the roof, they're up 50%, and 49 or almost 50% of the cardholders aren't paying their credit card off. They can't because the wages aren't high enough because inflation is outpacing their wages. Even though they're getting wage increases, when you look at your gasoline, gasoline's still up 40%, groceries still up about 22%, rent's up. All the necessities we need are going up, not down. So they can say, well, we dropped inflation from 9% down to 3%. Okay. What difference does that make? When you go to the grocery store, are you kidding? I mean, I go to Starbucks in the morning, I get these two of these, what they call like an egg and sausage sandwich and a small coffee, like almost 17, 18 bucks. I go, what are you, nuts? See, this guy, that's Jerry, what the hell, Siegel. But see, he always teaches. Remember, guys that can't do, they go and get a professorship. Guys who won't be successful on the outside, they have to go and teach. So this guy could not make a living on the outside. This guy could not build a company. So what I'm saying about our charting, all you need to know now is never mind the fundamentals. Fundamentals don't mean anything either anymore. Who cares about fundamentals? They screwed all that up. You know when they screwed that up? When they went to discount brokerage. That's right, discount brokerage. Because they started, remember what happened? Before discount brokerage, they would work hard for you and find a company which valuations went down. And all they need to do is find that company, good solid company. We've got to change the management. We get that management out there, we can really make that company rock. When they got rid of all that, and they couldn't get $125, $200 commissions anymore, they only get $15 or $5. They said, well, how are we going to make any money? So they bought the stocks first. That's when this whole Wall Street went corrupt. When they could buy the stock first and mark it up to you. So you're buying a stock at retail and you're trying to sell it to somebody else at retail. What are you, nuts? That's like going to JCPenney and say, I'm going to buy that suit for $400. I'm going to put it in front of the store for $800. You never sell it. Strong economy. The average amount in 2020, 2021, 2022, there's an average of about 850,000 brand new cars on lots all over this country, in car lots. Right now there's over 1.2 million. They can't sell them. They can't sell them because of inflation. But let's get back to the market. So earnings No, that's not what's driving the market, not at all. Because, again, what's been driving this market, and remember, when you have a good, solid economy and you have a good, solid market, what makes it solid is that if you have, first, business investment. Because business investment, that leads to increased productivity, leads to increased wages, it leads to increased savings, and from those savings, entrepreneurs, they start businesses. And remember, startups are the backbone of our nation because startups is where we get all our labor from. And it increases our standard of living, keeps our inflation tame. Business investment and productivity keeps inflation tame. But when you turn around and say, we're not going to do that anymore. In 2009, that's when Obama and Bernanke said, we're not going to do that. Never mind increased wage, or never mind business investment or productivity. We'll get rid of that. Why don't we just go and borrow as much money, print as much money? We'll do what they call QE, massive debt. So in 2008, think about this. They replaced business investment. They replaced productivity with 33 or 34 trillion in massive debt. And then don't forget, that was a debt that has gone up now 385% since 2009. Obama started that. And don't forget, they increased the money supply from 2009 to where we are today by 277%. And where did the contribution come from the debt? Well, first, 2009, the national debt was about 8 trillion. Obama, think about what he did. He doubled it. That was 8 trillion he contributed. Trump contributed 7 trillion. And Biden is blowing the doors off with debt. This guy's nuts. All he does is spend. And by the way, Biden's monetary policies, including this Inflation Reduction Act, where he's going to lower inflation and deficits in the national debt. Are you nuts? It's not working. It's going the other way. It's not working. They're all going much higher. So that contribution of debt is at 34 trillion. And they're trying to tell you, we're going to have a soft landing. Everything's terrific.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color-coded chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. There's a lot of noise out there in the financial world. Bank failures, interest rates, bonds versus stocks. It's a lot. That's why it's important to find a voice of reason that can guide you through these volatile times. Phil Grande at philsgang.com is where you can find honest, helpful guidance to successful investing.
Get the knowledge and understand how the market really works.
And for a limited time, you can join Phil's Gang free for 10 days.
philsgang.com. That's philsgang.com.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard. Things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing is to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Why are investors listening to Phil Grande at philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, it's like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grande at philsgang.com.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. So remember, with all this debt that we have, and everything that was supposed to, for example, the Inflation Reduction Act, that did not work. That's a bunch of BS. It was supposed to lower inflation, deficits, national debt, just the opposite. They're much higher. Take the example. Let's take the February CPI. It grew 0.4%. That's the highest monthly increase since September 2023, the highest. And that 60% of that 0.4% increase came from shelter costs, gasoline. Those are two of the most important categories. So they contributed 60%, shelter, gasoline. Never mind groceries. Groceries are up 20%, if you want to throw that in. Deficits under Biden are up $2.4 trillion. The national debt is increasing $1 trillion per quarter. Inflation, where the hell's the Inflation Reduction Act? It's not working. Inflation is going up, not down. And the proof of that is we're now in our 9th month of the Fed rate, short-term rate, 5.3%. 9 months. So if things were as good as everybody's saying, the economy's doing great, inflation's going down, then why is he keeping rates at 5.3% when they used to be at 0? Because it's not happening. Now, I want to show you, because I want to get into some stocks with you and show you what you got to do, because this is a momentum market. You got to play this market right. Now, we've been playing, and again, I invite you to be a gang member for free for 10 days, and you'll get the best charting education ever. I'm not just saying that. You will. And it's free. What do you got to lose? For 10 days, you're going to learn how to read a chart. And our charts, the charts we design, the charts that tell you, is money going into Meta? Is money going into GE? Or are they pulling money out? Wouldn't that be nice to know? Wouldn't that be nice to know? Remember, everything you hear on TV, all those people on TV, they're selling you a stock that they bought first. And now they're trying to pump the stock to get you to buy it. But a correction is going to occur in this market. And then later we're going to get the crash. And here's why. If you look at, again, this market, look what's going on, what they've been trying to sell us. That all this market's going up on earnings. No, it's not. If you take 2009 to 2024, that's a 650% rally. It's over 181 months, okay, from here up to here. That's all been driven by national debt of $34 trillion, by money supply increase from $7 trillion to $21 trillion. That's what's been driving this market. And from October, you take from October, they're so proud of here, October 2003 to where we are today, that they're jumping around, okay, and say, look at this, up 118%. 118%. Yeah. But how'd that happen? Again, it's the national debt keeps going up. Money supply keeps going up. So everything they've done to move this market from 2009 to where we are today, that was all through debt. This is a bubble debt bubble. This is a debt bubble. And this debt is going to pop. It's going to explode. Something is going to happen. No one can tell me that we can keep running on debt and deficits and you keep telling me that we can keep going and keep spending more than we take in. It doesn't work that way. The first quarter of 2024, they're all excited about, I told you about, up 10%. But what good is that? Because when you go in and look at the numbers on the first quarter, it shows you that when you take out the here, I got the numbers right here. First quarter 2024, 10% gain. 57% of that 10% was just 4 stocks: Amazon, Meta, Microsoft, and NVIDIA. 4 stocks, or let's do it this way: 496 stocks contributed 43% to 57%. 496 stocks to get 43% contribution. 4 stocks contributed 57%. What are you, nuts? And you think that's a strong rally? 2023. Let's take the 2023 rally right here. October. Everybody's all excited about the 2024. 5 months. 25% gain. Yay. But take a look at the rally. When you pull out the all the mega stocks, again, you have about, I mean, such a small contribution from the remaining 496 stocks. Even go back to 2000, the rally here, 2020, the 2020 to 2023 rally. If you take, we had a 2023, we had a 24% gain in 2023. 24% gain in that market. Everybody was happy. Market went up 24%. 493 stocks contributed just 6%. Everything else was the mega stocks. So no matter what rally you look at, if you pull those mega stocks, remember they were 7, now we're down to 4, then we're going to be down to 3 and 2. And what we're starting to see is rotation. And remember what I did with my members, I started to rotate them early out of the tech stocks. And we did really well with the tech stocks. We bought the tech stocks when nobody wanted them. when nobody wanted. And then we got in. Then we started to go into our. And you can see right here. I'll show you right here. We started to go into our oil stocks, and we started to go into our banks. We did really terrific with both oil and banks. All of those are up big time. And we have our industrials, those are up big. Those are up about 20%, 10 to 20%. And our XLE, again, that's your energy ETF. That's up about, I think that's up about, what, 15%. These stocks have done really, really well. And the reason why we took our profits from the Magnificent Seven stocks, because we could see they weren't magnificent anymore. Okay, you had a couple stocks carrying everything. So everybody's now in NVIDIA. What you got to do right now is you got to stay with stocks that have real momentum. Let's take, for example, our gold stocks. Look at our gold stocks. We told everybody to get into gold, and they thought we were nuts. Our gold miners. Look at our gold miners. They're all moving up now. And nobody believed us. I said, join the gang for 10 days. We'll show you how to get into the gold miners, show you how to get into the gold. And you're not late. You're still not late if you want to join and get in, and we'll help you with the gold stocks. And you watch what happens to silver. That's another stock nobody wanted. Now that's starting to move because, see, they're rotating out of the tech stocks, and they're rotating into, again, banks, oil, industrials. So again, if you want, you can join our gang for 10 days, and we have the best charting program of anyone because it's our own charts. All right, I want to show you this here. The reason you need to stay with stocks that are momentum stocks, like our oil, our bank stocks that are really, really strong, is because we're going to see this rally right here? Okay, if you take this rally since October, the one they're all excited about, okay, that rally that we're in right now from October to where we are today, we're going to get at least a 15% correction because we're up about 28%. And when you're up about 28% and you haven't had a correction yet, you're getting very close. Very close to a crash. I'm not talking about a crash. I'll explain the difference when I get back. But you better stay with real momentum stocks. And I'll talk about that when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. As the new year approaches, make a resolution to challenge yourself to become the best investor you can be. Phil Grande can take your trading to a whole new level. Innovative stock market investing tools and the experience of over 50 years combined to give you the edge in controlling your financial future. As a Phil's Gang member, you're taught the essential strategies of investing using stock charts, training videos, and seminars. It's information Wall Street doesn't want you to know. Learn more at philsgang.com. philsgang.com. Why are investors listening to Phil Grande of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grande at philsgang.com. What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out. philsgang.com. philsgang.com.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro, Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out. philsgang.com. philsgang.com.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
The $26 trillion of the U.S. government debt that needs to be refinanced over the coming years, and is being refinanced at much higher interest rates.
That's right. That's another thing. They're lying to you is because, remember, that rate is no longer zero. So that is why you don't see the Fed's short-term rate coming down and why it's been over 5% for 9 months. They're both-faced lying to you. And they want you to believe, okay, just like Obamacare. Remember when he got screwed on Obamacare? They want you to believe that these policies that Biden put, like the Inflation Reduction Act, they're working. No, they're not working. Gasoline's up 40% since he's been in office, right to today. Groceries are up 20% still today. Deficits, here's the killer, $2.4 trillion. So again, what you need to do is, and I'm going to show you here what's going to happen. This rally that we've had from October 2023 to where we are today, they're all excited about. And that rally, remember that rally went up 25%. Just like the 2020 rally, okay? That 2020, 2023, 118% rally, I mean, that was insane. I mean, everything went up. Oil went up, Bitcoins went up, everything was going up. Like they call that what they call it, the all rally. The all rally. Everything was rallying. Everything was rallying. This is coming to an end soon because you can't keep driving an economy without productivity. You can't keep driving an economy without business investment and keep moving these stock prices. QE, okay, QE is a con job. QE is a con job. When you take a stock and you drive it from $20 to $220 and the valuations are crazy, the only people who are making money in that deal are the guys who get out first. And those are the hedge funds. Those are the Wall Street guys because they know when to get out. Like I told my gang members, keep watching now. I said, what's happening? We are peaking. We are in what they call stage 3 pricing. When you get to stage 3 pricing, the hedge funds are dumping because they know the tourists are getting in, because the tourists always get in when they miss. They always get in at stage 3 at the very, very top. Where there's euphoria and this market will never go down again. Oh, this market's never going to go down again. That's what they said in 1929. And all you have to do is read all the newsletters, like in 1929. It's interesting. Go back and read all the financial newsletters in 1929. They're all saying the same things they're saying today. All of them saying, oh, this market is going to just keep going higher. It's not going to correct. It's just going to keep going higher. And what happened in 1929? 2 weeks later, after all those newsletters came out, you had a 70% crash, or whatever it was, but you had a hell of a crash. So right now, what I think is going to happen is this, and you can see it coming. We're already up about 28%. We haven't even had a 5% correction. So we're due for not a 10%. Now remember, a correction is much different than a crash. We've already had 4 corrections, okay? And the 4 corrections that we've had, they've been from 10% to 30%. A crash, okay, is when you're down 60%, like 1929 when you're down 75%, or the dot-com or the housing con when you're down about 60%. Those are crashes. We haven't had one of those because they've been propping the market up with all this zero interest money, with all this debt and money supply. They've been propping it up. So what you want to do is make sure you stay in the stocks that we're in, these stocks that have real momentum to the upside. And then what's going to happen is you're going to start seeing that as they start, the hedge funds are doing it now. They're dumping their stocks, especially the tech stocks. And then the tourists come in and start buying. They don't know what the hell they're doing. They always buy at the top. And what you see is the volume going up, but you don't see pricing going up. You see volume going up, but no pricing. That identifies what's going on. They're dumping their stocks, the hedge funds, and the tourists are picking it up. So you got to watch for that. So what we're going to do is I think we're going to get a correction, okay, 10 to 15%. And then they're going to rally right up quickly. Why? Because you're going to get all the tourists jumping in, buying a dip. And when they can't make a new high with huge volume, the hedge funds are going to come in and start shorting it. And when that comes down and breaks through the low, right here, I'm showing you right on my chart, breaks through the low, let's say it's 50% correction. That's when you go from a correction to a crash. So my guess is this run-up will be going up into the election. We're going to get a correction before the election. And then they're going to run it up going into the election. So they can look at the market, wow, vote for me, right? And then when it doesn't make a new all-time high, that's when the panic's going to come in. That's when the hedge funds are going to start dumping, and that's going to be the end of it. In the meantime, if they decide, hey, let's just keep doing more QE, let's just keep running the market up, we don't care, let's just keep running it higher and higher, we don't care how much inflation we have, what do we care? We're making millions and millions of dollars, the guys at the top. What do we care what groceries are? And they could do this. They could do this. They could just say that. What do we care? The groceries up 20%. My jet, my left engine on my jet, when I'm idling, I'm spending $10,000 when it's just idling, waiting to take off. What do I care? Bread's up 20, 30%. That's how they think. What are you, nuts? That's how they think. So, and the poor guy with his credit card, now he's delinquent, 50% of them are delinquent, and almost 50% of people are just making minimum payment. Think about that. With interest rates at 22%, on every $100, they're paying $22 on every $100. How are they ever going to get ahead? But it was, oh, no, Phil's wrong. Phil's wrong. Well, he's been saying for a long time, there's going to be a crash, and he's been wrong. I've been wrong? Every one of these corrections, 2018, we called that correction. 2020, we shorted that one. We called that correction. 2022, we called that correction. 2023, that temporary, we called that. We called every correction. You can ask my gang. But we didn't have a crash yet. But we will. So just be careful. Make sure you're staying in stocks that are good stocks. Okay, they have tremendous momentum behind them. And then wait for that sign when they're going to start giving away. Remember, when you have stocks, they're making all-time new highs. Don't get scared, okay? Those stocks, nobody's going to come in and short those stocks. Nobody's going to short those stocks. Hedge funds are going to short those stocks. Nobody in their right mind shorts stocks on all-time new highs. Let the event happen. Let the event occur. Okay, what's that mean? Let the pattern show you. When it all of a sudden pulls back 5, 10, 15, which I think is going to be shortly, and then when it rallies back up and can't make a new high and it fails, that's when you get the beginning of from a correction to a crash. So again, everything they've been telling us, okay, that everything's going to be fine, the consumer's strong, it's all a bunch of just nonsense. What else I had for you? There's something else I talked about the CPI. Oh, I wanted to show you right here. Let me get rid of this. I did this one. This chart here. I did that one. Let's see. Oh, here's the one. This one right here, right? Okay. This chart here, I want to show you something. Look at the money supply here. This is the money. This right here is, okay, wait a minute, this is the right one here. Let's see. No, this is the balance sheet. Oh, yeah, this is the one I wanted to show you. Look how they've been adding to their balance sheet. Remember, they've been doing QE. QE, what they do is this. They print money. This is how they fake everybody out. They print money, and then they go and they give the money to the 5 biggest banks. And then the 5 biggest banks take the money, and they exchange for their money they're taking. They give the Federal Reserve that they put on their balance sheet mortgages and treasuries. Goes on the balance sheet of the Federal Reserve. They're worthless. But they give the banks 100% of the dollar, or 100 cents on a dollar. Then the banks take it and they do the same trick. They go and they give that money to the CEO. The CEO takes the money, buys his own shares. Stock prices go up even though he has no earnings, he has no profits. That's what's been going on. Now look here. This is the amount. Look at the amount of the balance sheet of the Fed climbing here. Look at this. But now they got a problem. He said last week on the balance sheet they're going to stop. They're going to stop doing quantitative tightening. Are you kidding? That means they're not going to get that balance sheet down enough if there's another crash to start another rally. See you on the chart. Join my gang.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.